Bitcoin represents a paradigm shift. It's the digital transformation of money, property, and energy. And paradigm shifts are so profound that you're staring at them and you don't realize they took place because your worldview is constructed based upon a bunch of assumptions that you've always taken for granted. And so what Thomas Kuhn says in the structure of scientific revolutions and what we study at MIT is there's only two circumstances under which people willingly undergo a paradigm shift. And one way is you wait for the old guard to die. And the millennials they get it because they're different. And Einstein, said God does not play dice with the universe. Einstein never liked quantum theory. You could be a brilliant person, but you won't embrace the paradigm shift while you're alive in the absence of a crisis. The second way you get paradigm shift is a war. When there's a war and there are bombs dropping from above, you don't believe in atomic power, but then someone drops a nuclear weapon and the city evaporates, and all of a sudden you become a believer and you reassess your priorities.
In recent market downturns, Bitcoin slipped below $40,000, highlighting the volatility in the crypto sphere. Nevertheless, Bitcoin ETFs made significant strides, accumulating nearly $4 billion in assets amid the market turbulence. Despite short-term fluctuations, Michael Saylor remains steadfast in his perspective, regarding them as inconsequential noise. Saylor sees Bitcoin as more than just digital gold or property. He views it as a harbinger of a fundamental paradigm shift. He envisions a future where Bitcoin's ascendancy over gold propels its value to an astonishing $500,000 per coin. However, his foresight transcends mere valuation projections, as he believes Bitcoin will eventually reshape the entire financial landscape. Beyond valuation, Saylor predicts Bitcoin's market capitalization could soar past $100 trillion, signifying a monumental shift in global finance. Stay tuned for Saylor's revelation of his ultimate vision for Bitcoin and its transformative potential in the traditional finance system. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
You think of it as digital gold, then it should replace gold. Gold's worth $10 trillion, and that takes Bitcoin to 500,000. But when you think of it as digital property, like replacing buildings and land and other long storeholds of wealth, then, you're up by a factor of 20 or 30 from there. I mean, it should not be. It's much better than digital gold because I can move Bitcoin at the speed of light and I can program it to 1 million transactions an hour on an iPhone or a website. You can't do that with gold. So it's got more utility than gold, which means it's probably worth 20 or 30 trillion if it just replaces the gold. But instead of buying the Fontainebleau Hotel, which is a nice hotel, worth whatever billions in Miami Beach, instead of buying the equivalent amount of Bitcoin, if you bought the Bitcoin, you can move that to any city in the world every hour of the day, compose it, decompose it, recompose it, dematerialize it. And, when there's a nasty tax on it, you can just move yourself to a different jurisdiction where there's a better tax treatment. And if you think of it like that, then it's a multi-hundred trillion dollar asset class. So at 10 trillion is 500,000, at 100 trillion is 5 million. So I think, we're marching toward $10 trillion, which is, $10 million a coin, which is why Bitcoin enthusiasts see it's just a very great long-term store of value. And it's a great investment idea because it meets the needs of 8 billion people. The average person, the middle-class person that drives an Uber or works as a dentist, they can't buy $387 worth of a building in New York City every month as their savings plan, right? A person in Africa can't buy a small share of a nice piece of property. They can't buy $127 worth of a Picasso painting. So Bitcoin offers property rights at any scale, any amount of money, anybody in the world, and you don't have to worry about, will people like Picassos? Will they still want buildings in Vegas or New York? Will some politician tax it away from me? Well, can I take it to an airport? So if you're looking for an egalitarian, utilitarian way for people to save money and protect their life force or protect their economic wealth for the next 100 years, and you were looking for something that's kind of consistent with the mobile wave, Android phones, iPhones, websites, that's truly global, Yeah, well, I will say though, like even when it's 10 times better, what you have is a commercially successful venture. But for example, Warren Buffett never invested in Microsoft and Warren Buffett never invested in Amazon, right? Even though it's 10 times better, right? If you have enough money and enough power, you can ignore stuff. You know, my dad didn't use any of the new technology until at some point we gave him a television and YouTube did it. Like he didn't care about all the other things, but if you can sit and you can talk to the remote and you can stream on YouTube to anything, all of a sudden 80-year-old man decides he loves this now. And so it has to just click, right? I kind of knew, I tried everything for a decade. I knew it wasn't going to work, you know, from first observations. So I thought, well, what if I could find a digital gold, which was better gold than gold, something that is better than gold, but also a big tech monopoly? And here are my three criteria. I want it to be a better gold than gold. I want it to be a big tech monopoly, and I want no one else to appreciate it. I want it to be underappreciated. And that's what Bitcoin was in the second quarter of 2020. No one thought it was an institutional asset. Even though Amazon stock had doubled in the second quarter, Bitcoin was trading about the same as it had been trading in 2018 or 2019. You know, it got up to 10,000, it had smashed down to 4,000, it was back at 10,000. So I looked at it and I said, well, you know, based on all the information, you would think that a digital property network or a global digital money network is more valuable, knowing that people are losing confidence in currencies, losing confidence in central banks, losing confidence in governments, and this is a non-sovereign, open, decentralized system. So it struck me that the fundamentals were good.
Yeah, you would think that.
But it wasn't appreciated. So we're there, we have to take a risk. We literally have to, or we got to sell the company, right? We're done one way or the other. It looks like the Facebook of money or the Google of money in the year 2010 or 2011. While 98% of the world doesn't understand it, it's a bit too complicated, they're afraid of it. But just because you don't understand it doesn't mean it isn't true. It just means, you know, and I had the experience of riding the mobile wave. And I'm the guy in 2011 that bought Amazon, Apple, Facebook, and Google stock, you know, and they all worked out well. So get off the mobile wave, get on the crypto wave, and think that through. So that kind of made the decision straightforward. It wasn't without risk, but the alternative was pretty much throw in the towel and just either get beat to death fast or beat to death slowly. And so we got into this business at that time. And of course, the last 2 years have been, I think, fairly good ones in terms of commercialization, institutionalization of digital assets. I think that it's pretty stable at this point. I think that the great risk came in the first few years. It's just like, again, coming back to the metaphor of a fire. If you start a fire, right, and you can put the fire out in the first few minutes, but at some point when the fire is taken over the entire warehouse or it's broken out into the entire forest, you can't put fire out. So I think at this point, it's beyond that event horizon. But certainly back in 2012, 2011, 2013, there are a lot of questions like, would it be deemed property by the IRS? You know, would it be banned or outlawed? You know, the online gambling got banned and they just shut it down dead on arrival. So there are a lot of things that do get squelched. This had to get to a sufficiently decentralized, diffuse point where no one regulator or no one nation state would think they could stop it. And I think we're clearly there now. You can see that now with the utterances coming out of the White House, the Secretary of the Treasury, the SEC, and the head of the CFTC. But you couldn't have been sure about that in 2012. In the world we live in right now, before Bitcoin, you can have $1 million in your bank account, but it's credit. It's the bank says you have it, and the bank can take it away from you.
Yes.
And you can only move it pursuant to their permission to move it. And right now, the bank doesn't give you an API to move money. There's no, you could have $1 billion and 10,000 programmers. You can't create a program that'll pay $19, $22 transactions between here and Africa on a Saturday afternoon. You just can't do it. And guess what? For 30 years, you can't do it. And so all progress has come to a grinding halt in the financial world in the absence of money in cyberspace, because credit in cyberspace is a monopoly family which is caught up in a bureaucracy. So if we come back to Bitcoin, what is it really? It represents the true digital transformation of money, of property, of energy, of matter, right? This is 4 fundamental things the civilization is made of. For example, can you figure out how to create a wall in the real world, right? I use steel, I use bricks, I have a brick wall. Peter, run as hard as you can into my brick wall. Okay, well, so you run as hard as you can and you smash your face and you end up in the hospital. You ran into a brick wall. You can do that as an engineer in the real world because you have matter, and if you have energy, you can convert to matter, convert it to a brick wall. You can do the opposite, right? I can aim a gun at the brick wall, blow it up, or I can burn it and vaporize it, right? So we have that in the real world, and that's the basis of the civilization. Now, how do I create a wall in cyberspace? See, here's the idea. So what Bitcoin represents, it represents the ability to move energy at high frequency. Like, how about 1,000 times a second? How about move $1 billion in a second? How about, you're saying to me, why would I ever want to charge somebody $1 billion a second? Well, the answer is, if someone attacks me 30 million times in 1 second and I charge them $30 an attack, it's going to cost them $1 billion to do that. Today, a denial of service attack is, effectively for the price of the electricity, and there are no consequences, and that's why we have cyber insecurity and we have so much toxicity. And you can't even trust what people post online because they're probably a bot and they're not even a real person. And Peter, like every 15 minutes, there's a Michael Saylor scam account spun up on YouTube with 20,000 fake listeners, and I spend $1 million a year taking them down, and they just put them up faster than I take them down, and there's just no way to stop it because there are no consequences in that cyber arena because there is no digital energy to create consequences. The killer product that 8 billion people want is a simple mobile app that holds US dollars and Bitcoin, and if you have a currency, you have a property, it's a bank in your pocket that's completely open, permissionless, and you can trade instantly in 1 second, either in a currency or in a property with anybody on the planet, and no one can take your money away from you, and you don't have to ask permission. It would completely dematerialize the entire financial establishment, and it would empower everybody on Earth to take possession of their life. You ever walk into a Bitcoin mining center, you hear this wine. It sounds like a wine of ornate. But Bitcoin itself ultimately is about creating a truthful ledger. And I've talked about it. It is energy in cyberspace. It's encrypted energy. What you're doing is you're taking electricity, you're running it through a SHA-256 modulation, and you're spitting out a block of Bitcoin, which is encrypted, and then you're putting successive layers of encryption on the blocks over time, and which represent reified energy, right, or reified information. And so it is I describe it as like a fire in cyberspace. You can think of it as a fire chain reaction in cyberspace, but you could also think of a swarm creature as very organic because it's just an organically evolving thing. And if you roll the clock back 13 years, it was just a few cypherpunks working on it, and then it picked up power, and now
exponential, baby, exponential.
There's people in every country and every language working on something, and they're doing it because it's the right thing to do, and they feel like this is their best hope at creating something truthful that is beyond corruption. It's an incorruptible, beautiful thing.
Michael Saylor offers thought-provoking insights into the current state of crypto markets and Bitcoin's potential, emphasizing its transformative power. He interprets recent market turbulence as typical of the volatile crypto landscape. Saylor doesn't merely view Bitcoin as digital gold but as digital property, capable of supplanting traditional assets like real estate. He highlights Bitcoin's speed and programmability, which, he argues, imbue it with utility far beyond that of gold. Saylor's distinct perspective is captivating, providing a fresh outlook on the evolving crypto market. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.